This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Britain said on Monday its £75 million, $90.5 million, fund aimed at helping boost domestic production of nuclear fuel for power plants and cutting reliance on Russian uranium supplies was now open for applications. The fund, announced in July, will award grants to businesses involved in uranium conversion, a key stage in the process of creating nuclear fuel from the metal. It will remain open for applications from Monday until February 20th. Russia currently owns around 20% of global uranium conversion capacity.
Demand for U.S. crude and petroleum products fell in October even as oil production ticked up to its highest levels since the COVID-19 pandemic, according to monthly data from the U.S. Energy Information Administration on Friday. U.S. crude production grew 0.6% to 12.38 million barrels per day, BPD, in October, its highest level since March 2020. Still, the rise in production marked the lowest level of growth since July as shale growth has showed signs of slowing.
Moving on to the top news in the energy sector.
Coal and natural gas markets ended 2022 with strong gains on Friday after a global energy crisis triggered by the Russia-Ukraine war stoked prices, and tighter supplies expected in 2023 could fuel more gains. Industrial metals, iron ore and rubber finished in negative territory, pushed down in 2022 by China's strict zero-COVID policy and fears of a world recession. Agricultural markets, including grains and palm oil, jumped to all-time highs in March on adverse weather and pandemic-related supply disruptions, triggering higher food prices and warnings of famine, though those commodities gave up some of their gains in the second half.
The shale oil patch this week closes the door on a disappointing year while bracing for weaker output gains in 2023, hamstrung by rising costs, dwindling reserves and pressures to hold down spending. U.S. oil production this year will rise by an average of 620,000 barrels of oil per day, according to the latest government estimates, a third less than the roughly 1 million barrel of oil per day some forecasts called for at the start of the year. That shortfall has undercut shale's influence on global markets and helped lift prices for the second year in a row. Gains next year will be harder to come by, said Scott Sheffield, Chief Executive Officer of top Permian producer Pioneer Natural Resources. He predicted 300,000 barrels of oil per day to 400,000 barrels of oil per day of increased shale production in 2023. Next, we have the top news in metal markets. Copper prices fell on Friday, heading for their first annual drop since 2018 due to worries about demand created by surging COVID cases in top consumer China, a global growth slowdown and rising inventories. Benchmark copper on the London Metal Exchange, LME, was down 0.5% at $8,375 a ton at 17:02 GMT. Prices of the metal used widely in the power and construction industries are on course for a 13% drop this year. In the U.S., there is apprehension the Fed will push the economy into recession. In Europe, the energy crisis has put enormous strain on corporates and consumers, said Bank of America analyst Michael Widmer.
Iron ore futures ended a volatile year firmer on Friday, with the Dalian benchmark settling near a more than 6-month high, propelled by optimism around top steel producer China's unwinding of pandemic controls and economic support measures. Spot prices of the steelmaking ingredient also rallied this week, scaling a 5-month peak as traders brushed aside concerns about surging COVID-19 infections across China. But it was set to mark its weakest year-end finish in 3 years. The most traded May iron ore on China's Dalian Commodity Exchange ended the session up 2.8% at 863 yuan, $124.14, a ton, after earlier hitting 867.50 yuan, its strongest since June 9. It posted an annual gain of 43%.
We will now look at the top news in the agricultural sector.
Indonesia plans to import 3.6 million tons of raw sugar for industrial use and about 991,000 tons of white sugar for consumers, its trade minister said on Monday. Zulkifli Hassan did not provide a time frame for the imports. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.